What's up, traders? Welcome back to the channel. Let's go ahead and take a look at Bitcoin real fast. Let's go ahead and check out what we're doing today. Thursday was a normal trading day after the new year. There wasn't that much volume. So this week we'll basically kick it off. Everybody that was on vacation for the holidays is more than likely back. So trading is going to take place this week starting. So let's get ready for that, shall we? First and foremost, if we take a look at Bitcoin here on the daily time frame, pull up all of our moving averages, and these are exponentials with two simples. The simples would be the blue 50 and the red 200, and then your yellow, green, and purple lines are all EMAs. So let's go ahead and look at where we are on the 20 exponential. We have gotten back above that on the daily. That is good. We've gotten back above the 50 on the RSI, which is good. My only concern with this is there is a possibility that we could be putting in a little bit of some of that, right? Where we got up above the 50, traded at the 50, and then went back under the 50. I don't necessarily like that at all. I would love to see this be able to stay above the 50 on the RSI if possible, and then get back above that 60. Anything above this point right in here is going to be super bullish, and we can look for a potential breakout to the upside. Even though we are above the 21 on the EMA, we're just 1 day close above it. So today could end up pointing to this candle as being a trap. If we get that, then we'll probably be looking for more bearish plays coming up at the beginning of the week. Remember, big bars or big daily candles to the downside is not what we want to see, as that would show us that there is more momentum to the downside, and we want to see that momentum stay bullish and start to lead back above. So as of right now, it looks okay, and you can buy pullbacks to support. The only problem is, since we got the yearly opening here on 2025, we've had 3 straight up days, and today's the first day of a pullback. So I'm assuming there will be some buyers in here. You got the 50 simple and the 21 EMA right there. The reason you're experiencing a little bit of pullback from this region is this daily supply zone right here at 98,594. You can see we traded up into that yesterday, and that's basically where we struggled. We go into the intraday time frame. Let's get rid of our moving averages here. You can see we traded right up to that, and then that was it. You could not close a single hourly candle above that region. So sellers are coming back into the market based on that daily supply zone. If we do get some bullish strength, then obviously you'll break through that. I typically don't like to trade when we close so close to the supply zone or a resistance, because usually when you get a strong close like that or so close to the line, if it was a normal trading day, like if today was Monday, I would assume this was going to get broken. All right. Now there is intraday scalps that you can take with this, obviously, but you just can't expect to get downside continuation. You have to be quick on taking your profits. Moving on to the weekly chart. Weekly chart doesn't look that great. It does look good that we got a liquidation break. However, this isn't a very strong bullish move. Not as strong as I would want to see after a liquidation break. So one could arguably say that the downside is still winning. So there are going to be people out there watching for a head and shoulders formation here. The thing about that is if you're taking shorts looking for a secondary shoulder to take place, you're basically trying to call the future by looking at a pattern that hasn't even formed yet. You know what I mean? It doesn't really make sense in my opinion, but I'm not a pattern trader. I'm just letting you know that there is a head and shoulders formation that is currently forming. You don't have to believe me. You can simply look at it. I mean, if we go into the monthly time frame, you're going to see it even more clear. Left shoulder, head, right shoulder. It's the monthly just open. And the fact that we are bullish at the beginning of the month is a little bit scary, because we could be setting a monthly high. And as long as we're at around just above or under, right? Basically, if you're at the line just above or just under it, it's going to lead for people to look for that bearish continuation from last month. Basically, what we want to see is we want to see multiple days closing above November's high. Otherwise, you will have a monthly head and shoulders formation there. Going into this, there are things that I am looking at. And I will discuss some of those things. I discussed them on the video that I put out for the beginning of the year, suggesting that more or less right now all we've got is a pullback. And that is true. That is literally all we have right now. We can't predict what's going to happen. All we can do is look at all the data points that we have. Just because it is bullish at the beginning of the month doesn't mean it's going to reverse, but we do have to be careful or cautious with our positioning. Going back to the weekly time frame, let's pull this up here. Like I said, I would love to see tomorrow close above last week's high, as that would indicate a potential weekly trap. When I talk about traps, I don't like to go above a weekly, and I don't like to go below dailies that often. Hourly traps do happen when you're watching intraday support and resistance. You know, take that with a grain of salt, but looking at traps, I like to see dailies and weeklies being formed. We don't have a trap yet. This could still be downside continuation. You're just trying to find the weekly high at the end of the week. That's all it is. If the week closes out strong, nice and bullish though, it's going to look more like bullish continuation coming off of a nice couple week pullback. So with that being said, let's look at the RSI. We're still well above the 60 here, which is good on the weekly. If you're looking at the daily and you're above the 50, that's good. It's more bullish. If you're looking at the weekly and you're above the 60, that's good. It's more bullish. If we get below the 60 on the weekly, then we could say that you have lost your bullish momentum on the weekly time frame. Doesn't necessarily mean that it's going to be bearish. It's just a simple fact. Anything above the 60 is a bullish signal. So here on the daily time frame, what can we look at this momentum oscillator and say? We can simply say we have lost the bullish momentum from the daily time frame. Do you have bearish momentum? No, you do not. You need to be closing dailies under 40 for there to be bearish momentum. And you can see that we bounced from 40. Okay, so this just, it's in a range. You can look at the candles and see that it is in a range. Nothing major is happening here. Being above the 50 does give us a little bit more respect to the upside though. It is more bullish than bearish, and the weekly is going to follow, because obviously it takes more time for a weekly candle to close to give you your final input on this indicator. But with that being said, we did liquidate the danger zone and we are up away from it, and I do like that. As long as we're above that, I am leaning more for the bulls, looking at this just to be a simple pullback. If we lose the weekly 60, then I will be more quick to jump on potential short sides, because that would more or less put the daily down here. As far as the SPX goes, it's the benchmark and you can only trade options. We did get a liquidation below that danger zone low on this right here. And then we did get a nice bullish move from that area, which, you know, is better than not. Better than not. I don't want to see us closing dailies down in this range, because then it's going to suggest we get under the midpoint of this gap, you're going to go fill the gap. And to be honest, in my opinion, you're still in a buyable opportunity even under the gap here. All right. Does look like a head and shoulders. A lot of people are seeing that. Everybody's looking for shorts based on that. So there could be some sell side pressure coming into the markets here in the next week or two. I would like to see January take off strong to the upside, as it's just a whole lot easier to make money in a bull market, right? If you get to become sideways and choppy or even hard down moves, it gets a little bit more difficult to get in trades at the better areas, because your levels are not going to work as good in a severely volatile market. You're going to be looking to buy specific levels and you're going to get ran over. Moving on to next week, we have an 83-point move scheduled for next week, and that's a 5-day trading week. We had an 82-point move scheduled for last week, and it was a 3.5-day trading week. Literally, they're suggesting only one more point for this week. That's because the VIX it's struggling to break out to the upside here, right? This is what we want to see for bullish continuation. Ever since we broke down here, I have maintained my bullish posture based on the volatility index. You had the scare, right? That volatile move, but look where you are. Essentially, all you did was fill the gap here that was put on by the volatility that we've seen from the yen carry unwind. This was essentially a gap fill and a liquidation. and then immediately a reversal out of the area, and then you've not been able to get or close dailies back above 20 bucks. If you look at the VIX, it looks to me like it's absolutely doing this. That's what it looks like to me. It doesn't, if it was going higher, I would want to see support hold there and then head up. For a couple of days there, it was a little bit tricky, but it offered up a perfect opportunity to look for shorts here on the VIX or longs on the S&P or Bitcoin. And the same goes for here. These two wicks up into this is okay as long as you see that reversal take place either on the day that happens or the next day. And that's what we got on Friday. We got a down move. So it looks like this is going lower. We do trade oil in the Trade Talk Discord, and it's been a very difficult trade unless you were just selling way out of the money calls and way out of the money puts. That strategy for a long time on oil paid out well. It got to the point when we got this bounce, I essentially said, well, if we can't break out to the downside, then we're going to look for the volatility to expand on an outside breakout. And we have broken out of this wedging formation here. So the way we set this trade up was to buy calls on the XLE. And here we are. I basically said, as long as you're closing dailies above the 2024 yearly opening range, I think you can hold that long. If you listen to that, you did not have to exit that trade because you did not close. Once you broke above it here, you did not close a daily under that line. And here is your expansion. All right. You can go ahead and take profits because you filled this upside gap. You got Q2's low here. So I don't know if we're going to see continuation from that oil breakout. But remember, this thing isn't necessarily going to move exactly one for one with oil because you didn't get a massive breakdown like this on oil. This is going to track your oil stocks and your natural gas stocks. This is an energy sector, so it tracks all the companies in the energy sector. And some of them companies aren't doing very good. This chart looks very much like ExxonMobil, your big oil companies. I'd say you could take profits from that. It was a $3 move. This asset moves very slow. Should have been about a $6 add if you bought around the 84.49 area. Go ahead and close that trade, take profits, whatever, right? Just letting you know, we don't ever look for continuation, especially when the last month was extremely bearish. We were looking for a pop. We got that pop. There potentially is a trade happening right now on the euro. So I did post this on, let me go into my profile here and I will show you. Oh, where was it? Right here. So basically, if one was a divergence trader, this weekly div on euro has arrived. It is not closed with the diversion yet. All right. But it has now, because we got the close. It's also at an old weekly support, basically looking at this weekly candle here. So if we go back and look at the chart, we can see here's that weekly support, and we did not quite close above it. But if we pull up our weekly div, here, let me get that a little bit better. Bullish divergence. You got a higher high on the indicator and a lower close on price. So that is your divergence there. Now, I'm not a fan of euro. For the last quarter, it was straight bearish with hardly any pullbacks at all. So if we look at that, we can see how bearish that whole entire quarter was with only 2 bullish weeks in between. I'm not necessarily like uber bullish on euro, but if we do get a dollar pullback, if the Fed is correct, there could be an argument made for looking for a bullish pop here on the euro. All right. So with that being said, you guys have a fantastic rest of your day. Make sure you guys trade safe, trade smart. And as always, happy trading, everybody.